Hello, my name is Raitis and welcome back to another weekly outlook and trade breakdown from yesterday's trading session. And in today's video, we're going to cover a lot of things. We're going to go through all of the asset classes, DXY, so currencies, index futures, commodities, bonds, and so on and so on. So stay tuned for everything and we will get right into the charts. Let's start off with DXY as usual. On the monthly time frame, we saw some slight correction to the upside from the monthly busy high right here, currently rejecting this level. If we drop onto the weekly time frame, you can see we are also rejecting this low. We showed no willingness to close below this low, which is a key sign for me. We also closed inside the weekly SIBI right here. And again, remember, the protocol for a SIBI is that we don't want to see a closure at above 50%. And this is the key level right here. I combine it with the monthly fair value gap busy consequent encroachment level. So you have it right here. And basically just looking at the market structure analysis, how we close around daily liquidity pools, weekly liquidity pools, and so on, and other weekly PDRAs. The market is probably primed for a correction to the upside, and my target was already hit yesterday for, again, I said this also on the last weekly outlook, that market will probably retrace if it shows no willingness to trade lower below this low. We ran this low on a shallow basis. Again, we're probably deferring liquidity, so everybody thinks this is a low in the marketplace, but we may just retrace higher to then sell off again. This is not yet confirmed. Again, we just had the retracement right now, and now we need to see what the market does. Monday opened higher and traded into our target, which is the daily fair value gap low right here. So wonderful, wonderful, wonderful. I also had a short on Euro USD, which was profitable. Let's look at T-note futures, what they did. Of course, if dollar should be bullish, this needs to allow T-bonds, if T-bonds are bearish, this will allow for bullish prices on dollar. And that's basically what we're seeing. You can see if we go out to the monthly time frame, we are right at this reclaimed fair value gap right here, and on the other 10-year T-note futures, we traded back into this fair value gap as well, and you can see all between all of the other T-note futures. We traded into this SIBI as well on the monthly time frame. The weekly, let's stick to 30-year T-bone futures. You can see we traded into this bearish order block, rejected, and we consistently reject this monthly order block mean threshold. And you can see there's no willingness to trade back higher again. We're at the weekly fair value gap currently at the moment. Again, this is a SIBI. We closed above that, so initially we thought we were bullish and it would run out this high, and we did, as our target was, but we did it only on the 10-year and 5-year and 2-year T-note futures, so only on the shorter term T-note futures we ran out the high. And right now, as it looks like, T-bonds are also primed for a correction into this weekly fair value gap. And yeah, this is what we're currently seeing. Basically, we're still inside a consolidation. We're in trapped order flow. Of course, this looks quite bearish with yesterday's trading candle. But you can see we're stuck between a discount PDRA and a premium PDRA, and we're trading inside this range, so the market is holding. And let's see what the market offers. Of course, if T-bonds are consolidating, dollar can still rally or trade lower. As long as T-note futures are not screaming bullish, dollar can rally and set up correction. And let's see if we get a continuation lower. For that, T-note futures have to be bullish, but I'm currently not seeing that. That's why I think the correction on dollar will continue and resume a little bit higher. That's why I really don't know what the market is primed to do next after we hit our short-term target for this week on dollar. And yes, so of course euro sold off. We had a short yesterday during New York session, but again, I only share my indices trades with Discord. And again, yesterday I forgot to share my awesome trade. We'll get onto that as well. As I said, we're going to do a trade breakdown. But euro, again, also from a market structure analysis, ran out this high. No willingness to continue and close above this high. Sold off, traded through this daily order block. And yeah, this is basically a breaker. Traded back into that on Monday and then sold off. Wonderful, wonderful, wonderful. Let's see if we can get into this daily busy right here. If we can continue the sell-off. And pound is pretty strong. Euro GBP is let's see. Euro GBP is at this mitigation block. Again, I'm still more bearish on the Euro GBP. You can see we're trading off of this daily order block. But Euro GBP seems in a slight consolidation. No willingness to follow through below this low on Monday yesterday. So let's see. That's why GBP USD is quite resilient to trade to the downside. We're still at this excuse me, still at this daily order block open, and let's see what the market offers. Currently I'm on the sidelines. USD CAD also in trapped order flow. So really nothing there yet. USD JPY bullish, trading into the daily rejection block. And yeah, let's see. So this is New York session, and with a wild move at the news, wild move higher. And basically USD JPY is actually, because if we anticipated a retracement on dollar higher, and USD JPY was showing willingness to trade to the upside. So this was the best pair to trade actually. And this was basically a nice entry right here. Went the fair value gap, we had this order block, and then at the news, the market completely traded higher. Very, very nice. And this is actually also a breaker block. So right here, breaker. And this would also been a nice trade actually. Based on relative strength analysis. And targeting again. Of course, the swing high in the daily is our target, but the first target would have been the daily rejection block, of course, for a 1 to 4. Very nice, delivered that in basically a few hours. And yeah, very nice trade actually. Didn't miss that actually. And but again, no problems. That's why we do the evening commentaries, to learn. And yeah, let me quickly draw in the rejection block right here. So wonderful. Let's see where you can see a continuation. Now we have a 4-hour busy. We don't want to see market close below the 50%. And yeah, let's see if we can take out the high right here and trade back into this bearish order block. I think we don't have to cover USD CHF. USD CHF was not optimal for a short. It's more weak to the downside. We're trading out the mean threshold of this order block. Yeah, Aussie also not bullish, because if you look at Euro and compare it to Aussie, Euro and GBP USD are much stronger to the upside. So relative strength is definitely on Euro. Euro GBP again, more primed for lower prices as I see this run higher as a manipulation to then run lower again. Now let's come to the futures. Very interesting. Again, my short-term target for this week was hit already yesterday. We had a massive move of 2% on NASDAQ yesterday, right here in Q, 2% move, barely 2%. Or if we measure from, because this is the close of the last day, so it was 2% move on NQ, and our target was hit. I'm really sad that I didn't do the weekly outlook yesterday. I really had to manage. I just had no time because I had to manage my 2 positions on the currencies and then here this trade. But again, why did I trade Mondays? Usually I don't trade Mondays, but we had a swing low forming in direction of higher time frame order flow, and my expectation was that we see a retracement higher back into the weekly volume imbalance right here. YM, of course, didn't reach it as it's much higher. And yes, so let's see. Why did I anticipate a run higher? Because we saw no. Okay, why is this? Wait. So again, we saw no willingness to continue to the downside. You can see never traded below this low, rejected this monthly order block open right here, and traded higher, consolidated, respected this daily bullish order block, and then we saw a stop run, and I anticipated a run higher, continuation of this retracement on Monday into the weekly volume imbalance, and that was my idea. I got the confirmation, we gapped higher, London rallied higher already, so wonderful. My initial trade idea was this entry for 1 to 3 into the weekly volume imbalance. I didn't get this entry because at the start of the New York session at the opening bell, I thought we would get asset disparity. Yeah, but we didn't get that because YM was really weak, NQ was strong, and then ES was something in between. So I thought we would get asset disparity, and in this case, I always wait for the strongest asset to retrace, and my entry for NQ was at this 1 hour order block, so we missed it by a couple of ticks and handles. So this would basically be the entry right here for 1 to 3, somewhere around that. But as you can see, the market never filled us, which is unfortunate, but what should you do? And yeah, that's why I had to look for re-entries, and the re-entries were on YM, on the lower time frame, which was right here. We had basically a propulsion block, order block, trades down, create another order block, and then I just entered long right here immediately. Scaled one more position in right here, and then I held it into the, first of all, daily order block, but I really, because I knew that YM wasn't the leadership asset, ES was literally the stronger of the 3, and ES was the leadership, and that's why I'm pretty not upset, but it's unfortunate that we didn't get the trade. And yeah, I knew that ES is the leadership asset, so as ES reached its target at 10.15, with the 10.15 candle right here, I scaled out partials somewhere inside this candle right here on YM. And then I had another trade, as I was risk-free on YM. I had another trade on NQ, where I scaled in on the lower time frame at the retracement. So let me quickly show you. I think it was a 5-minute time frame. Yes, we had another propulsion block, so order block, propulsion block, and I entered at the high of the propulsion block. And this was the trade. Stop loss below the low of the propulsion block, targeting as an ultimate target the consequent encroachment. But I also took more partials as we were at the final hour of London, because I also use time-based partials. This is what I actually implemented over or learned over the last few couple of months and weeks, and this really helped me with partial profit taking. So I took more partials. So I took one partial at 10.15, was it probably, when ES also traded into its target. Where I took, well, let me quickly check, because I don't know when I took the first partial. Yeah, so this first partial was right here. So also around 10.15 as we traded above the first swing high. Took partials there. Then another partial above the high right here. As I said, time-based partial at the end of London close. And the final target was the consequent encroachment of this weekly volume imbalance. And it's a perfect trade, guys. So wonderful, wonderful. Not the best risk to reward ratio in this trade. But again, this was only, I entered this trade only because we have reduced our risk on YM. And then YM got stopped out break even eventually after we scaled out more partials. So I had 3 contracts right here on the mini. And then scaled out to somewhere here at the highs, as I said already, and then market dumped and stopped out 1 contract. But we still made great profit on these 2 trades. Unfortunately, it would have been much more easier to trade ES, and this would have been literally the best trade. Awesome risk to reward ratio and so on and so forth, and more headaches. So yeah, this is it. This was the trade. I really had I just forgot to post this trade on Discord. I really had to manage 2 positions, the euro short and here the longs on the indices. That's why yesterday was a little bit hectic and I forgot to send out this trade. But now let's wrap up the weekly outlook with gold. Gold, we hit our target last week at 3,000. I was calling this since February, January, somewhere around that. And we perfectly predicted the rally. Again, we also had predicted the run higher from this order block, so another up into our target, a nice 4% or 120 pips in profit. Oh, sorry, this is not, this was the futures contract actually. So where's 3,000? So yeah, 114 pips, perfect. With that said, ladies and gentlemen, the expectation is that we want to see a retracement. We're inside the daily fair value gap, I think, because we closed. I mean, for a fair value gap, the market can close below the consequent encroachment, and we can trade in there and hang around that level for a while. You can see we're stuck between the high and the low of this fair value gap at the moment. So that's why I'm really not interested in trading this. We have this weekly order block. But gold has reached our target. That's why I really don't want to do anything with this pair. Silver as well. Took out the highs, showed no willingness to continue through. So we could see a retracement back into the body of this weekly order block. Or actually, we don't have to see that. We traded already into the daily candle on Friday. And then we could see some rally higher. So that's that. I hope you enjoyed the weekly outlook. Let's look at, now I wanted to share one quick thing. I want to it's already 20 minutes, the weekly outlook, but again, we have no real major economic news release. Unemployment claims as always on Thursday, and core PCE price index on Friday. So let's see if we get some setups tomorrow or on Wednesday, but if I have 1 or 2 good setups this week, then I will call it a week and won't trade Fridays or Thursdays. But let's see. I won't push the edge too much if I get some nice trades. And the last thing I wanted to quickly mention right here is that open interest has dropped significantly due to the switch of the contract, but this just sets the stage for a retracement into a premium to probably then sell off for another round. You can see open interest has been increasing as we were starting to form this low, and then open interest drops massively inside this consolidation and we rally higher. And I think we're not going for all-time highs on the equities, but this is just a retracement back into a weekly fair value gap or order block, this order block, to then sell off again. So with this said, I hope you enjoyed the weekly outlook. Join the Discord channel in the link in the description below. And I wish you all a pleasant week. Stay safe, trade safe, and we will see us in the evening commentary today in the evening. Bye bye.